All right. Good morning, gang. Good morning, afternoon, good evening, whatever time it is, wherever you're at. Welcome back to the live trading room, Thursday edition. How's everyone doing today? Let me know if you can hear me and see me. Let me make sure everything is running. Perfect, perfect, perfect. Can you guys see screen, hear voice? Mm-mm-mm-mm. Hope so. Unless I forgot to click a button here. Give me 1 second, guys. There we go. Now people are responding. Thank you. Thank you. Thank you. There's a little bit of a delay or what happened. Awesome. There we go. I want to make sure everything was loud and clear before we get going. Happy Thursday to you guys. We got another busy news day on the radar. I'll go ahead and bring over the Forex Factory right here. We had interest rate hikes yesterday for the dollar. We have interest rate hikes again this morning. Now, the weird thing about this, you can see the 8 o'clock timeline. I'm not used to this. We're in that weird daylight savings period where we're an hour earlier here in the U.S. So I'm used to this coming out at 7 o'clock and 7:30, and hovering around my computer, just making sure nothing crazy happens. And I got an extra hour to deal with. So in about a half an hour, we're going to have an interest rate change. And we're going to get to experience that live in the market. So if you missed yesterday's and all the funny stuff that goes along with it, you get to redo it today. Welcome, YouTube, Justin, Billy, Ada, Dennis. Thank you guys for joining TradingView as well. So for today's trade of the day, yesterday we did a little bit of a viewer's choice. We talked about consolidation on the euro. Today we're going to go to the dollar Canada. This is going to be a little bit of a follow-up off of one we did yesterday. But as you guys know, we make predictions throughout the week, and then the bigger predictions don't really change too much, right? The market is very rarely at a level that causes you to make a really significant change in directional prediction, especially for your longer term stuff. So usually the beginning of the week is kind of our bulk analysis, and then everything else is a follow up after that. And today's going to be a follow up on dollar Canada. So dollar Canada, we're going to start here on the daily. Do you guys remember what we have setting up on the daily? It's small, but it's in there. You can probably see it in the middle of your screen. It forms during consolidation. Anybody? Yep. We have a potential advanced pattern formation, specifically a Gartley pattern. So I'll measure this out one more time. We'll kind of shortcut it because we're revisiting this. Maybe the first time for you guys on YouTube, so maybe I won't shortcut it. Got to remember doing this for the live stream as well. But we're looking at a 4-point move here. First being, hey, Kenya, thank you. X to A. This is going to be a great example of an anchor legs. Now, I don't really care about the difference between anchor legs and impulse legs, but in our training, we do teach, or we do use both those terminologies. Impulse legs are ones like extensions, legs that break and violate structure. Anchor legs are going to be like retracements or moves like this that do not violate structure. Both are perfectly fine for pattern recognition. Impulse legs or extensions are usually a little bit easier because they stand out to the eyes, but both are perfectly fine. So we have our initial leg right here. This is going to be our X to A. Our first retracement is going to be our A to B. Trust me when I say it comes down to a 618 Fibonacci retracement. Our next failed extension, so like another retracement inside the retracement, is going to be our B to C. And if price pushes down to our 127 extension right here at 126.36, we are going to have a decompletion for a Gartley. And this is going to be the decompletion zone. That zone is going to start from the technical point of our decompletion and go all the way down to our X leg. Now, why does the zone end at the X leg and not push beyond the X leg? Throwing you guys a pop quiz. Why does the zone stop at the X leg and not go beyond the X leg? Yep, because it is invalid if the X leg is penetrated. Now, with that being said, I've worked with many different traders. Some of them have different rules, right? So I believe Jason Greystone's like this as well. Um, for me personally, and this is how I was taught, the pattern is validated if any point of price pushes beyond X. Some people require the break and the close below, like a normal kind of structure type of deal. Doesn't matter which one you choose. It is up to you. The only thing that matters is that you're consistent with it. You're going to find that a lot in trading, especially for you guys who are new. So for you guys that are listening out on YouTube, pay attention. There are going to be a lot of traders out there that you stumble across on social media. A lot of evil, bad traders. Stay far away from them. But they're going to tell you this is right and this is wrong. I'm here to tell you the exact opposite. There is rarely any right or wrong in trading. In many cases, there is what's right for you and what's wrong for you, right? So always remember that. Don't get discouraged if you do something a different way and someone tries to yell at you and say that you're evil, you're dumb. If your way works, that's all that matters. Now you got to take the right action to make sure it works. You can't just like make up a rule and say, oh, this is going to be my rule. It works. You got to test it. It's got to be testable, verifiable, and repeatable. But if you've gone through all the right protocols and it works, don't let anyone else's word stop you from trading it the way that your stats and your data show that work. So we got a potential Gartley pattern here. We also looked at this similar zone here as a projection point of where price can go to. So yesterday we were looking at two things, right? Yesterday price was trading right at the B leg, so this previous level of inside structure support. And we were looking at this as a decision point. We're watching it live. We said, if price holds at this level, then we can look for a counter trend move to the upside. If price violates this level, then we can look for a continuation move to the downside. And again, watching it live, we violated it. We then had all the funky interest rate stuff. And then lo and behold, this morning, we have broken and closed and continued on our way down. So we can still look for continuations down as a continuation trader a little bit lower to the top of this zone here. I wouldn't shoot anything below 126.25, but you can still look for a little bit of a move lower here. So if you go down to a lower time frame, let's say a 1 hour, and some of this move is played out already, something that you can look for here is a continuation trade. So I thought we were getting a pullback this morning. We kind of stalled off. And again, this is normal before an interest rate decision. The markets don't like to kind of do anything, to kind of sit there. But if you were to get a retracement here, which it looked like we were getting, this is lower time frame, so you can go down to the 15 as well. We do a lot of work in the lower time frame. Then you can look for a continuation down to this zone. There's still a little bit of meat on the bone here when it comes to price movement. And let me just look at a range bar chart real quick. Not supposed to show it here on TradingView, but if I just sneak it in, yeah, you'll see lower time frame trading. Very similar to the one we looked at yesterday, guys, live rumors, right? You can see we already had the pullback in the previous structure. Very nice wicks right here, very nice candles right there. If we were to get a fresh break of this level, fresh break and another retest, that's another opportunity to trade it down to that lower level of structure that we looked at. So that is Canada. Two different trading opportunities here on Canada. You got the bullish Gartley pattern as an advanced pattern trader, again, in this zone right here. Or if you're more of a lower time frame trader, a day trader, you can look for a continuation trade. Again, we've already retraced and pushed down. So what you would need first is a fresh break. And what I mean by a fresh break is another violation of structure, a retest, and a continuation down. Any questions on Canada? This was a short one. I'll do one more. So if anyone on YouTube has something they want to look at, I'll do one more. Usually I try to make these things about 20 minutes. This was a short one. It's plain and simple today. So if you're out there on YouTube or of course here in the regular live room and you have something you want to take a look at, let me know. We'll make it a double trade of the day if they can get something in real quick. If not, we'll boot them out and we'll go on our way. Really just buying time until 8 o'clock. That's going to probably disrupt the markets a bit. But let me know if you have any questions about this. Boop, boop, boop. Pound dollar. Great. Do we really want to analyze pound dollar right 20 minutes before an interest rate hike? We'll do it. You wrote it in, so we'll do it. I'm a man of my word. So pound dollar was the first to come in, so we'll do pound dollar. And there's some others that came in, but we'll have to try that another day. So let's go to pound dollar. Let me real quick. I deleted my notes. There we go. Dollar Canada, GBP, pound dollar. We're at 11 minutes. And let's go to pound dollar. Dollar Canada should back bounce to fill 1 day FVG. What is an FVG? New acronym to me. So get to learn something today. While we're waiting for that, let's look at pound dollar. All right. So pound dollar, again, we got an interest rate decision hike in about 18 minutes. So we don't want to look at anything short term because it's going to be pointless. So what I like to do in situations like this where we know there's a high impact news event and I'm trying to prep for what's the potential fallout is I start looking at the next key levels of structure. So if we were to move up, if we were to get a sharp move up, where would that move likely to go to? If we were to move down, where would that move likely to go to? So I'll put the ball in your court real quick. If we were to move up, guys, if price were to rally up, where do you think is the next stopping point? Because you'll see this even with fundamental news events, right? I always say that fundamental news events are like the driver, meaning like the person that pushes the gas pedal. The technicals are still the destination. So the technicals will still tell you where these moves are going to go to. The news event is more of, how heavy is our foot on the gas in getting to those levels. Fair value gap. There we go. Thank you. So we got Antonio saying 133.43s. Let's put some lines on the chart. 133.43s. Right up here. We got Jagger saying 133 even handled number right up here. You guys looking at the same zone. Talked about this yesterday, the lower part of the zone, the upper part of the zone. Bobby saying 133.50s. Bobby's right in the middle of the two, right at the little structure swap area. Raphael says 134.40. Yeah, I think we're all in agreement about staying out. So what we're doing, we're just making a prediction. So I don't know if you just came in, Rain. But yeah, no one's entering. No one's trading this. We're just asked. We got one of the traders on YouTube asked to look at this. So we're talking about how we handle predictions before high impact news events. Yep. So what we're doing is we're trying to predict if we were to get a big move up, where's that next stopping point? If we were to get a big move down, where's that next stopping point? And then we can prepare accordingly. So I agree. I think these are good levels that you guys chose right in here. Again, if you want to be a little bit more specific with it, maybe look for another clue. We can add fibs. We can add our horizontal volume, right? And we can really pinpoint that level right in here. So again, 130, looks like 134. Actually, you guys are a little bit lower. I thought someone said 134. Did anybody say 134? I'm making that up. Oh, 133.34. Sorry. That was my own little sabotage putting 134s. 134s is the level that I liked for this because we get a little bit of this up here. Sorry. A little bit of this up here. We get a little bit of that up here. We get a little bit of this inside. Right in that level is a good zone. Ray says such a good setup for a short. Maybe. Depends. I wasn't personally interested in a short, but could be. Definitely a break and close below structure here and a retest. So, with that being said, we kind of gave away the answer already. Or if we're likely to go lower, this would be an easy one. Where are we likely to go lower to? So we have our upward projection, we have our downward projection. Yeah, the low one's pretty easy, right? A retest of our previous structure lows right here. $1.30. Yep. So we have the key levels. We know that these key levels are going to act like magnets, right? Structure acts like magnets in the market. Magnets, not maggots. Magnets, meaning it pulls price towards it and it throws price away from it. So these are the levels that you want to watch for our interest rate decision. Another key level here in the daily is going to be our lower level of structure right here. If we were to get some type of really big move down to 128 to lower level right here. And you know that these are levels you would look for relief at. So look for counter trend trading opportunities at this level. And the same thing, you'd want to see how price reacts at this level as well. This can offer maybe a future counter trend trading opportunity, or if we violated it, another counter trend trading opportunity up here, or a continuation opportunity from here to here. So again, at this point, this is all we can do, right? I'm not a news trader. I don't try to close my eyes and hope I'm in the right direction of it. So all we can do is kind of pre-prepare. All we can do is kind of say, all right, if we go up, here's the next spot we're going to. Is there anything that I need to be on the lookout for at that level? If we go down, here's where we're likely to go to. Do I need to be on the lookout for anything of interest at that level? And sometimes the answer is wrong. Sometimes the answer is right. Ultimately, we always just wait for the market to tell us what the right answer is. Or we can just flip a coin and scream YOLO, right? We'll do it YOTO. You only trade once. So that's how I would break down pound. I don't think there's much need to go down to any type of lower time frame. Mainly in these situations, you're just going through the I process, the identify, maybe the I and the P, identify and predict. And the identify and the predict should both be on your higher time frames, in my opinion. Real quick, negative correlation between dollar index and pound dollar. Oh, we just had this conversation yesterday. False. Oh, we're not going to have it again. I think I'm going to make it a podcast. Here's my opinion. The dollar index has absolutely zero effect on the pound dollar. The dollar index has absolutely zero effect on any currency pair. Yeah, I said it. And I'm waiting for the day for someone to tell me why. There's actually already a podcast about it. I think it's called Why the Dollar Index is Pointless. But if you can tell me why or how the dollar index affects another currency pair, I'd be interested in hearing it. And the dollar index doesn't even affect the euro. It just is the euro. Basically, 60% of the dollar index is the euro? The dollar index is essentially the euro, right? You want to see something crazy? Look at the dollar index. So look at the Dixie and then look at the euro dollar. And they're very, 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 very similar because it is essentially the same thing. Right? See this euro dollar? Flip it upside down. What do you have? Oh, look at that. You got the dollar index. Why? Because it is 60%. Dollar index is 60. It's about 60%. I'm probably somewhere off on the exact number, but it's about 60% of the euro. Or the euro is 60% of the dollar index. So the dollar index is the dollar's strength or weakness against a basket of currency pairs. 60% of that basket is the euro. So it's no surprise that, again, you see the dollar index looking like this. You see the euro looking like that. Euro dollar looking like that. Almost the exact same. But it's one of the few things that still kind of gets my blood flowing is the idea of correlations in Forex. And again, we had a really nice conversation on it last night or yesterday at the end of the session. But I would just say I think it's a very, very, very poor idea from a trader's perspective. Now, if you're an investor, a little different story. But from a trader's perspective, I think it's a very, very idea to ever base your opinion on one pair off of what's happening somewhere else. So I think it's a very, very bad idea to look at the dollar index and be like, oh, the dollar index is down. That means the dollar is weak. Therefore, I'm only going to buy the pound dollar. I think it's a very good idea. But there's a Trading Coach podcast on there. Let me see if I can find what episode it is. Trading Coach podcast. Dollar index? Oh, there we go. episode. If you want to hear more about my opinions on the dollar index, check out Trading Coach Podcast, episode 368. Is the dollar index useful? Spoiler alert. No. Actually, I think I did give some positives about it. Just not from a trading. But yeah, check out that episode. It'll give you more. It'll give you kind of a. I don't have time to kind of go on a real rant today about it. Again, because we did so yesterday. But Trading Coach Podcast, episode 368. If you want more of my opinion on it. And again, we're speaking trading, not investing. There is a difference between the two, and we're speaking specifically the Forex market. And it's just the Forex market has a little bit of a different nature than some of your other markets out there, where everything is a unique battle. So like when you look at the euro dollar, you're not just trading the euro, you're trading the euro versus the dollar. So it's a little bit different. Rain says, but maybe having that thought psychologically is a person of not confident or lazy to actually work or love shortcuts. No, I don't even think it's that. I don't think for someone that has that thought, I don't think it's laziness, or I don't think it's shortcut. I don't think it's anything negative. I think it's, we know the 4 stages of trading, right? What is or maybe you don't. Does anybody know what the first stage of trading is? Like, I don't think it's a negative sign. We're not calling people that think that stupid or anything like that. No, not at all. Right? The first stage of trading is unconscious incompetence, which sounds like an insult, but it's really not. But basically, it's very similar to like a baby brain, which also sounds like an insult. I'm going, man, I'm digging. This is like when I get into arguments, I could dig myself into a bigger hole. But essentially, what it means is that you don't know what you don't know. So like, I've still got young kids. They're not at that stage anymore. But, the first time, we've all done this before, right? The first time the kid sees like an electrical outlet, what do they want to do? They want to stick their finger in it, right? Because they don't know that it's bad things can happen if you stick your finger or a fork into electrical outlets. Like, ooh, it's a hole. Like, let me put something in it, right? And then you got to tell them, no, don't do that. You're going to electrocute it and die. Or like if you touch a hot stove, right? It's just like, it's a red little stove. You're like, oh, that looks fun. Let's touch it. And then you burn your hand. And then it's a learning experience. Now hopefully, not to touch the hot stove again because it hurt like heck last time. So in trading, it's very similar. Like we only know what we're taught. And sometimes we're taught good information. Sometimes we're taught bad information. Sometimes we're taught things and our opinions change over time. Now, real quick, the trader on YouTube, sorry, I disagree. Been trading. Okay, well, again, I'm not saying anything about you can't be successful, but I would love for you to take I would just love to hear. I would love to hear how it's useful. And that's the argument that I've been making for years, and no one has given me an answer. So if you can tell me how it's useful, how the dollar index has given you an edge in trading a completely different pair. Again, trading, I'm assuming trading, not investing, because I keep saying that. I would love to hear it. I'm not saying that you can't be. I'm not trying to call you unsuccessful, and I appreciate the argument or the conversation. But I would like to hear how. I would like to hear how. And hey, maybe I get educated. You guys know I'm very open-minded, right? So my opinions change all the time, right? A good example is volume. You go back in time, I used to rant against volume. It's stupid in Forex. It's not real volume. It doesn't count. Right? I remember even talking to Mike Bellafiore saying, no, I don't trust volume in Forex because it's not real volume. Right? You fast forward 5 years later, I still understand that it's not real volume, but now I've spoken to people and I've realized that, hey, excuse me, it can still have usage. Maybe not the same usage as you would in the stock market, but it can still have usage. So my opinion has changed on that. So if you can explain to me, the usefulness out of the correlation, I would love to hear it. And either I will disagree with it or I will be educated and learn from it. Either way, it's a win-win. I don't see there's no negative side to it. But I'm not trying to call you a bad trader or anything like that. And you don't need to give me the bona fides. I've been trading for years. Like I don't really care about this stuff. I'm just curious on how you. I'm curious on the usage because I just don't, after all these years, I just don't see any value in it. I don't see any value in looking at the dollar index and using what's happening on the dollar index to predict what's going to happen on a pair. It it just does not compute with me. But I would love to hear it. So if you have some time, type it in. If not, you can always shoot me a comment or an email if you don't want to kind of get into it here in a chat. I know it's sometimes difficult to type stuff in. But there was another question. Interest rate hikes in 5 minutes, by the way. Speaking of news, I'm about to become a father for the first time. Hey, congratulations, man. Congratulations. Welcome to the end of your life and the beginning of a new, better life. Yeah. Nah, seriously, congratulations. That's awesome. Any advice on how I'm supposed to manage this event along with my trading? I can tell you this, and it may not be this much at first, because in the beginning, fathers, we don't really have a purpose, and we can support our wives, but we can't really do anything for the kids, to be honest with you. Like they want mom, they just want sleep and food, and we don't have the things that can give them food. But I would say you're going to have to become a lot more efficient. So fatherhood caused me to, because I used to be someone that just put in hours and hours and hours and hours of work. And when you have a kid, a lot of that time you had is going to be converted into kid time. It's going to be converted into dedicating time for the significant other, the partner. It's going to be extra time for naps, maybe, because sleep is going to be an issue for a good couple of years. So start thinking about how you can accomplish the same things you're doing now in lesser time. So like if you're currently dedicating like 5 hours a day to your trading, you may have to cut that in half. You may only have 2.5 hours of trading. So the question is, how can you either accomplish the same thing in your trading or trading education in 2.5 hours that you could in 5 hours, or can you move something else around? I like video games was removed for me. Like I stopped playing video games because it was just, I'd play like an hour a day or something like that. I just needed that hour for something else. But start thinking about that. The Pomodoro technique helped for me. I've got a lot of podcasts out there on productivity and efficiency because that's something I've dug into a lot over the last, 6 years now. Because I wasn't very good at it, but definitely become more organized. Try to become more efficient in what you do, and don't forget to schedule out time for the partner, for the kid, because you don't want your family situation to wreck your trading, but more importantly, you don't want trading to wreck your family situation. So Chris says, from one father to another, adopt whatever mom needs. And I suggest a book, The 4-Hour Work Week, Kiss Sleep Goodbye. Again, I'll say that. What did you miss? The guy, you missed me asking you to please give me an explanation of of how you use the dollar, how the dollar index is beneficial in identifying trade setups on other pairs. That's what you missed. But Chris says, 2 books, The 4-Hour Work Week, and then Kiss, Sleep, Goodbye. All right, so we're going to wrap things up here. We got the interest rate decision coming out in a minute. I never got my answer from YouTube, but I think the trader had to step away for a little bit. So please watch the recording, and if you want to leave it in the comment section below or shoot me an email, please do it. But I am open to hearing. I am curious about your explanation. And again, I'm not here to call you a bad trader or anything like that. I just like to learn. So if you can shoot me something that allows me to learn, I would love to hear it. Real quick, last question that came in from YouTube, and it's 8 o'clock now, so we're rolling. Um, what are the differences between trading advanced patterns on the hourly versus 4 hour in terms of frequency, win rate, and other stuff fitting around life and backtesting? Your frequency is going to be higher. The lower time frame you go, the higher frequency you're going to have. I would say with patterns, the lower time frame you go, your win rate is going to be a little bit lower as well. But that's typically how it is with most things because you deal with a lot more noise on the lower time frames. So lower time frames, less frequency, or more frequency, more frequency, lower win rate. Higher time frames, higher win rate, lower frequency in most cases. I don't worry about name calling. No, I'm not. I didn't call you. I didn't call. You're trying to make this to an argument. I didn't call you any names. Did I call the trader any names, guys? Was I negative at all to the trader who was speaking about the dollar index? I was very positive. I'm not even saying you're wrong. I just asked. I was curious if you can please give me an explanation of how you use it so that I can learn. I'm not trying to say you're a bad trader. I'm not. Look, if you know anything about me, I'm not one to tell people that you can't do this, you can't do that. In fact, I just said that before we had our conversation. I'm curious of how you use it in your trading. It doesn't mean I'm going to agree with it, but I like learning. And you missed it, but I said the same thing about volume, right? I thought volume was stupid simply because there is no real volume in Forex trading. And for many years, I was against volume. And then I spoke to some people, I did some research, and I see how volume could be useful. There's still no real volume in Forex trading, but that doesn't mean it can't be useful. So I'm not calling you stupid. I'm just saying it's, yeah, I know it's a different style, but I would like you to explain how you use it. That's what I'm curious about. I would like you to explain how you use it. How do you use the dollar index? What effect, or how does that affect the trades you've taken on other trades that you take on other pairs? Because I am typing. Look, you're getting very defensive. And that's usually not it's a good sign for the other person on the other side of the argument. But yeah, you don't have to do it right now. Don't worry. If you want to take some time and gather your thoughts, you can shoot a comment under the YouTube video. You can shoot me an email, akil@tier1trading.com. I'm not trying to make you feel bad. I'm not trying to put you on the spot. You don't have to get defensive. I understand how forums work. This isn't a trading forum. I am generally just curious on how you use it. I would just like to hear on how you use it. Not going to say you're wrong. Don't worry. Anything like that. So we're going to end the live stream now. Thank you, YouTubers, for joining. Hit that like button on the way out. I'll see you next Tuesday. Again, add Akil Stokes, or not add Akil Stokes. Well, you can leave a comment underneath the video if you have any questions, or if you want to give me the explanation of the correlation deal, or you can shoot me an email if you're more comfortable that way, if you don't want to need everything public. But I would love to hear. I have a growth mindset. So thank you, guys. I'll see you next week. I'll see you this weekend for a Trading Edge video. I've got solo daddy duty, but I should be able to get it done. Hopefully. You might hear screaming kids in the background. But take care, TradingView. Take care, YouTube. See you next week, and see you on the weekend with the video. Live rumors. We got our interest rate out the way.